And good morning. This is Mary Ellen McGonagle, and you're watching the MEM Edge Show. And this is the show where we put you in front of where the action is in the broader markets. And we certainly are getting a bit of a bumpy start to the week with the US-China trade war taking center stage yet again. So let's go ahead and take a look at what we are going to be reviewing today. Of course, we are going to go ahead and drill down, take a look at where the current markets are. You're going to want to have, of course, a clear-cut sense of not only where we are, but what to look out for going forward as far as potential areas of resistance and support so that we can navigate the difficult period that we're in currently. And then playing the strength in large cap stocks. Last week, we did see a lot of breadth in the large cap space, certainly relative to other areas of the market. It wasn't entirely healthy, but larger cap stocks seem to be holding in well. We'll take a look at areas there that we can keep an eye on. And then also spotting candidates using the market movers table. Now, by candidates, I mean shorter term plays. For those of you that have a shorter term horizon in your investing, we can identify potential candidates by using what's called that market movers table, which is on the front page interface of stockcharts.com. Also, we'll take a look at some of the IPOs. BYND, Beyond, Uber, ZM is Zoom. These came out over the last 1 to 2 months, and they're doing remarkably well, certainly given the downward pressure that we're seeing in other areas of the market. So we will go ahead and take a look at those particular stocks. And then also I want to let you know I'm going to be doing an upcoming what I call series where over the next 2 weeks with the MEM Edge Show, I will be talking about how you can effectively trade the volatility that is occurring in these broader markets. We're going to look not just at the VIX, but also individual stocks, areas of the market, so that you can buffer your activity against the volatility that we are seeing out there in the markets currently. We certainly have seen quite a pickup in volatility. So join us for the next 2 weeks. We are going to take a look and really talk about how you can effectively trade given this volatility that we're seeing in the markets. So let's go ahead and take a look at the broader markets. We're looking here at a daily price chart of the S&P 500. And as usual, what I've done is gone ahead and overlaid some of these indicators, and certainly over the price, we have these simple moving averages. This green line is your 10-day simple moving average. The red is your 50-day. And then the blue, that's your 200-day simple moving average. Also up here on the top, we have what's called the RSI, Relative Strength Indicator, and Momentum Indicator. But let's take a look first at the simple moving averages, because from my work, having a sense of where the markets are is using these simple moving averages is really quite powerful. Looking at the recent uptrend here in the markets, we can see that the S&P has kept above this upward trending 10-day simple moving average. More recently, of course, the markets have pulled back, and we've seen that the indice has broken down below that 10-day simple moving average. More recently, down below that 50-day simple moving average. And from my work, a break below that 50-day simple moving average is a negative. So again, we're looking at a daily price chart. So each bar is 1 day of price activity. But let's take a look at the other overlays that we have. So up here on the top with this RSI, that relative strength indicator, as it breaks below this dashed line, that's your net neutral, that is also negative when it breaks below. So we can see the RSI has essentially remained below this dashed neutral subsequent to this break below this shorter term and then the longer term simple moving average. Going down below, I have what are called stochastics. These are another momentum indicator. Again, we want to pay attention to the positioning of the stochastics, and they are below this net neutral 50. in negative territory currently as well. So in essence, we are in a generally negative time period for the S&P 500, but there are pockets of strength within that, but this breakdown and also these negative near-term indicators are telling us that definitely caution is advised. So the other blue line that I have positioned here is a horizontal line that is right here at this 2800 level. And the 2800 level is this next area of downside support. So we can see that the S&P 500 did pull back down to that 2800, but it was able to bounce last week. Certainly midweek, we got a nice bounce in the broader markets, but we will want to pay attention to the market's action around this 2800. If we get a break below the 2800, that is going to be a very negative shift in the dynamics. And we're positioning that 2800 because we can go back to this October-November period. This is where the tops of the market back here during that fall period, we were looking at that break above that 2800 as a positive, but now on the potential downtrending period of the broader markets, we are going to use it as support. So that's where we are with the S&P 500, but I also want to use history and take you to a longer view of the S&P 500. So now we're looking at a weekly price chart. Each bar is 1 week of trading activity, and the red line is your 10-week or your 50-day simple moving average. And what we want to look at here is take a look at history, going back to this fall, October, November period, which in turn did wind up being the beginning of a bear market. We're looking at a weekly price chart. So going back to the initial break last October below this 10-week, 50-day simple moving average, we also on the weekly had a break of that RSI below this net neutral. And then drilling down here, looking at the stochastic, I'm sorry, actually we have the MACD. So I'm going to just take a quick moment and update it because we are going to want to use the stochastics when we are looking at these broader market indices. I've found them to be quite a bit more powerful. MACD is helpful as well, but we want to look at these stochastics. So we're taking us back again to this October period and take a look because we did also get a break on the weekly of the stochastics below this net neutral. So what I'm pointing, the reason I'm taking us back to this period is because we can use history as our guide going forward. So currently the RSI has been able to, on the weekly, sustain a presence above this net neutral. The stochastics are trending downward, but we are still above this 50. So should we get a break below that, similar to this October period, a break below that 2800 and the RSI and stochastics negative, that would be very, very negative, certainly for an intermediate term prognosis for the broader markets. So let's go ahead. We have a sense of where the S&P 500 is, where the markets are. Now let's go ahead and drill down a bit further and take a look at some of these sectors. And this is the candle glance, and it's giving us a snapshot view, a 2-month period for various indices. I've gone ahead and populated it with the Dow Jones Industrial Average, the NASDAQ, the S&P, the Russell 2000, and then also using some of these S&P sector funds. So we have the consumer staples, utilities, technology, real estate, and industrials. So this is your standardized view, which can be helpful, but I find it even more powerful to go ahead and add an indicator. So in this case, I'm going to use the RSI, that relative strength indicator. I want to see where the relative strength is in the broader markets. Go ahead and sort that by descending. Now we're going to have a clear-cut sense of strength to weakness. So up here in the upper left side is the stronger areas of the broader markets. It should come as no surprise that we are seeing these defensive groups up here in the forefront: consumer staples, utilities. Actually, volatility has snuck in here up in the forefront, but then we can see real estate investment trust stocks, and those up here in the forefront. We've been reviewing them over the last couple of weeks because they generally provide higher yields. The stocks are viewed as a bit safer. They are, again, defensive in the sense that regardless of the economy, there'll be a need for utilities, there'll be a need for these consumer staple stocks, and then real estate investment trusts offer a nice high yield, but also the low interest rate environment and the prospects for the underlying stocks remains quite sound. So we can see defensive areas remain up here in the forefront. Volatility is creeping up. It's now at about 16, almost 17. Once we get up above that 18, that's very, very concerning as far as the prognosis for the broader markets. The VIX index is the volatility index. It's also known as the fear index, and it's looking at put to call and options activity over the next 6 months. So as that we see more as far as options that are pointing toward investors' concerns and sense that the markets might continue to go down, we'll see this fear index rise. So we're currently at that about 16.5 on that. But let's look at some of these other indices that we have positioned up here in the forefront. Industrials surprisingly up in the forefront, but again, it's all going to be relative, and there are some pockets of strength within the industrials. A lot of the bigger Caterpillar, Deere, those companies are suffering at the hands of trade war tensions, but it is a wonderful pocket of strength within industrials that we'll go ahead and take a look at. And then down here at the bottom, this is the yield on the 10-year treasury, and we can see that while it's shown as being weak, simply said, treasury yields are dropping. They're down here at about 2.4%, and that very well could point to another reason as to why these defensive sectors are up here in the forefront. For instance, utility stocks on average, the yield among all of the stocks is about 3.3%. So certainly quite a bit better than the 2.4% that investors would seek and get from that 10-year treasury. So there's a view. We now have a sense of where the strength is in the markets relative to these broader market indices. So that's going to help us as we move forward and take a look at where I talked about large caps finding a bit better performance. And so we can utilize this information going forward. But before we do that, I want to take us back to I talked about using the market movers. Let's go ahead and do this. We're going to take a look at stockcharts.com, this initial page, and show what we are going to be looking at here. And this is that first page on stock charts, and we can see this is telling us where the broader markets are currently. A lot of weakness certainly within the NASDAQ and other indices as well. But what I want to show you here is this market movers that you can look at the top 10. It can show you the most active, percent up, percent down. We're looking at the percent up, and here's why. The broader markets are continuing to suffer. They are trending downward, but these are stocks that are in essence holding up and withstanding against the downward pressure in the market. So we want to look at that. I talked about, for those of you that are shorter term in your trading horizon, this can be a wonderful tool, a wonderful place to look. So today, of course, this is news related regarding Verizon and AT&T, but some of these other areas could be interesting. I'm going to take us back to a look and a view at that particular market movers table from Friday. So over the weekend, what I did was took a snapshot of the close on Friday and which stocks, because look at this action on Friday. We can see the NASDAQ was down, the S&P, very similar to today, a very negative broader market. But here were individual stocks that were again, up in a down market. So we're going to take a look at two of the stocks in this listing from Friday, actually three. So we can see that Humana, this is of interest to me, and UNH were up on Friday. This is an area of the healthcare sector that has really been very poorly performing here of late because of that. It started with political headwinds, the sense that we have an election coming up, and it could impact some of these stocks. And in particular, UNH is United Healthcare, Humana. These are healthcare providers that were hit because of the potential Medicare for all possibility. And that really hurt these particular stocks. So let's take a look, because been on the prowl, on the lookout for a potential turnaround in these particular stocks that did get hit on political headwinds on healthcare. So here's a daily chart of UNH, United Healthcare, and we can see that the stock has been in a very clear-cut downtrend. We're looking for a potential reversal. So this is Friday's action. The stock actually is up again today, 1.3%. So as what I want to show you is how you can identify a potential downtrend reversal. The first thing that we will want to key in on are these simple moving averages. This green line is your 10-day simple moving average, the red is your 50-day, and then the blue is your 200. So the relevance here is, as this stock potentially attempts to reverse this downtrend, it will be met with upside resistance at these moving averages. So we can see on this daily chart consistent uptrend. The 50-day simple moving average is acting in essence as a barrier. So we have finally broken up above that 50-day simple moving average. So that is the good news very near term. However, there is very sound possibility that the stock will find additional resistance up here at this 200-day simple moving average. So the stock's price now is at about 244. This 200-day is at 255. So we have about a 5% potential upside before resistance can be held again, because we can go back here historically at this other downtrend reversal attempt here in March, and sure enough, that 200-day simple moving average acted as a barrier. So very, very short-term potential upside here. The RSI is trending upward above this net neutral zero, and then your MACD, the black line, is now trending up above that net neutral zero into positive territory. Now, from my work, I would like to see the stock's price break up above this 200-day before even getting interested. But again, for those of you shorter term, there is a potential play here from this 50 up to this 200-day simple moving average. And then let's take a look. We talked about Humana on Friday. The stock was bucking that downtrend in the markets. Let's see if that stock is continuing its upside today. And what we want to do from here is go ahead and take a look at a daily chart on Humana. And this particular stock is not as healthy at all. We can see that while it broke up above this 10-day simple moving average, interestingly, it is up about 1% today. So we can see that that Friday action is carrying into today despite a similarly negative environment. But we can see that the stock's price really has just been bouncing around. This downward trending 50-day simple moving average very clearly is going to act as resistance using history as the guide. But once, if we break above that, currently the 50-day is at 258, it does have a bit more room, upside potential before your next area of potential downside upside resistance. But let's take a look here at the RSI. It's not quite positive. It's right there at that neutral at 50, just starting to trend upward, but we're not quite there yet. The MACD had that positive signal, the black line up through the red, but we're still below this zero. So Humana would not be a candidate yet. It's not ripe enough so to speak, but that's how we can use that market movers table to potentially get in front of, again, shorter term possible trades. So let's go back because I want to show you one other stock that was up really significantly on Friday. This is UAA. The company is Under Armour. It is a leisure, or actually sportswear, uh, not only manufacturer but distributor. So it was up 7.55%. So what I want to do is show you what you can do when you see these stocks that are up. You can, we'll go ahead and show you shortly, but you simply hover over it. It will tell you the name of the stock, but you're certainly armed with the symbol. So from there, what you can do is go ahead and research, why is UAA stock up so much today? Is it a move that could be potentially sustainable and something that might interest you as a short-term trade play? I did just that. I took a look, why was Under Armour up on Friday, and it was all about an analyst upgrade. JP Morgan upgraded the stock to overweight from neutral. And oftentimes that's all of the information you'll get, but if you drill down further, you can get more information. So in fact, the analyst that covers UAA with JP Morgan, they upped their price target to 29. The stock was currently at 24, so that's a significant potential advance. But what he did is, this is after many interviews, these analysts, of course, they are charged with covering particular industries, particular stocks. They get to know the company, they get to know management. So for me, it is of interest that he actually, subsequent to a discussion with a highly regarded CEO, Kevin Blank, the analyst cited the fact that the stock, the CEO is now in a different frame of mind as far as accelerating their growth. So he talks about, drills down a bit more as far as they have new product lines, footwear, apparel launches coming up. They actually have a lead time reduction that's going to get their products out faster. So a stacked pipeline through 2023. So as an investor, this is going to be of interest to me, certainly because that's a very lengthy growth line potential prospect, and they're looking out into 2020 as far as their sales and earnings growth. So in essence, a shift in the company in line with other growth prospects. So this is a way that you can, again, drill down a bit further, because at the end of the day, regardless of what may be going on, what prognoses may be out there, it is going to be the chart that is going to be your ultimate decider as to whether a stock is compelling or not. So let's take a look at UAA, analyst upgrade on Friday. Management talks about new products coming through. So we're going to take it a bit further and look at, this is that gap up, that 7.5% on the stock on Friday. And it is in fact still continuing to be able to at least not be down as much as the broader market. So we could see a continuation of this uptrend. Take a look at that volume on Friday's action. The RSI up above this net neutral, trending upward. The MACD had that black line up through the red and also up above that net neutral. So this could be a compelling short-term play. However, look at these simple moving averages. We have the 10-day is your green line, the red is your 50, the blue is the 200. Just simply eyeing the position of the price relative to that 50-day simple moving average, the stock is a bit extended. And by that I mean the 10-day simple moving average, we can draw our eye over here. It's at 22, and the stock's current price is 23.5. So I would look for maybe a bit more consolidation, but certainly the stock could have more potential upside if it were to break above this 24 to new highs. So that's a very drilled down view of how you can potentially utilize that market movers, particularly on days when the broader markets are trending downward. These are stocks that are bucking that downtrend. So I talked about the move into large cap stocks, and certainly not a move into it, but it's a relative area of outperformance. So what we're going to do is go back to that initial page on stockcharts.com, and I'm going to take us to a little bit of a different window. And what we're going to do from here is look at a preset screen on here, what's called the Scooter Report. And quite simply, it is the stock charts technical rating. And I say simply, it is an actually involved, it's looking at the technical ratings of various stocks, but it's a really powerful. I go through a lot of charts every single week. I'm looking for those stocks poised to outperform the markets. I want those big movers. And oftentimes I'll run many, many screens, have a short list of stocks, come over to this Scooter Report, and oftentimes this upper portion here is populated with a number of those potential candidates. So this is the Scooter Report for large cap stocks, and it's sorted by strength. So the higher the number, the better. We talked about areas where the markets are currently strong, consumer staples. So we can look at this first stock, COTY, a beauty products company. And this is all about a turnaround. The company had a dismal 2018. The management is coming in, they're turning things around. This is another stock that has new product lines, new areas of potential distribution, and the stock indeed is up again today. The RSI is positive. The stock is finding support at an upward trending 10-day simple moving average. We can see the MACD had that positive black line up through the red, and it is also above that net neutral zero. So very interesting stock. Let's drill down another, because what we can do is look at areas where we identified strength earlier today, because consumer staples are holding up really quite well. This is Tyson Foods, TSN, and we talked about this stock last Monday, and we can see its uptrend is continuing, although it is consolidating, which would make sense given this significant advance. But TSN, in addition to providing products that are in the chicken space, they also are getting into potentially the protein alternative meat products. The stock yields at 1.8%. We can see this uptrend very firmly in place, but it is consolidating now, which is actually something that would be expected given the big advance. So we can look at some other stocks. Chipotle is CMG is a very interesting stock in the sense that the growth prospects are quite big. The stock is emerging out of this space. You really would not know what was going on as far as market pressures elsewhere, because this is a very, very positive looking chart. The stock is poised to break out of this base. Your RSI and your MACD is poised to have that positive signal crossover. So if we were in a healthier environment, I would be very, very constructive on it, but this chart looks very positive for this particular stock. So I did want to take a look very quickly at some of the IPOs. I talked about those companies. That came out. We have just a little bit of a moment or two here to take a look, because when you're looking at these IPOs, you are going to I wanted to go ahead and pull up this daily, but I'm going to go ahead right into the intraday so we can look at a 1 hour price chart to help guide you, because these IPOs have really been quite explosive and they are really holding up. It's up, it's down a little bit today, but when you're looking for those positive crossovers, we're looking at a 1 hour price chart. We want to see the price breaking up above key moving averages in line with your other indicators showing up positively. So on this, I have a 5 and a 13 hour. When the stock pulls back, you want to be looking at this type of action. The stock breaks back above simple moving averages, RSI trends upward, as does your MACD. I'm going to leave it at that. For those of you trading this week, happy trading.